The trading floor of the Indonesia Stock Exchange is usually a cathedral of chaos, a place where fortunes are shouted into existence and dissolved in milliseconds. But on a sweltering day in Jakarta, the usual frenzy paused for something far more solemn than a mere IPO. There was no aggressive ringing of the opening bell to signal the start of a feeding frenzy. Instead, there was a measured, almost reverent declaration. The Republic of Indonesia was issuing the world's first sovereign green sukuk. This was not just a financial instrument, it was a national vow, a legally binding promise to the international market that the capital raised would not vanish into the general coffers of the state, but would be tethered exclusively to projects that healed the earth. To understand the weight of this moment, we must first unlearn the fundamental language of Western finance. In the conventional banking system that dominates New York and London, the bedrock of the economy is the loan.
You lend money, and you expect that money to return to you with interest. The money itself is the commodity. But in Islamic jurisprudence, this mechanism, making money from money, known as riba, is strictly forbidden. It is viewed as parasitic, a detachment from the tangible reality of labor and creation. Therefore, a Muslim nation or corporation cannot simply issue a bond, which is essentially an IOU with interest attached. They must issue a sukuk. A sukuk is often called an Islamic bond, but that translation does a disservice to its nature. It is not a debt, it is a share of ownership. When you purchase a green sukuk, you are not lending money to the government of Indonesia to do with as they please. You are buying a certificate that represents a partial ownership in a tangible physical asset, perhaps a hydroelectric dam in Sulawesi or a solar array in the rice fields of Java. Your profit does not come from the ticking clock of interest, but from the actual revenue generated by that specific asset. The financial return is inseparable from the physical reality. This structural difference creates a unique ethical alignment. In the Western model, a bank might lend to a company without caring deeply if the company pollutes, so long as the company remains solvent enough to pay the interest. In the sukuk market, the investor is an owner. If the asset is corrupted, the investment is corrupted. This alignment laid the groundwork for a revolutionary legal rule that accompanied the financial innovation, the Green Fatwa. The Council of Indonesian Ulama, the highest religious authority in the largest Muslim nation on earth, issued a decree declaring that the burning of forests and the degradation of peatlands was not merely a criminal act under secular law, but a violation of Sharia. They argued that environmental vandalism was a sin. This fatwa transformed the green sukuk from a clever financial product into a mechanism of spiritual compliance. It signaled to the market that protecting the environment was no longer just a matter of corporate social responsibility or public relations. It was a religious obligation, as binding as the daily prayers. The capital raised, over $1 billion in that initial offering, flowed directly into sustainable transport and waste management, proving that the ancient prohibition against usury could, paradoxically, unlock the funds needed to save the future.
If the Green Sukuk provides the financial vehicle for this transition, the fuel that powers it is drawn from a much deeper well, one that predates the stock market by over a millennium. To understand why a banker in Kuala Lumpur or a scholar in Cairo sees climate action as a theological imperative, we must open the Quran and look at the definition of humanity itself. In the Islamic worldview, a human being is not an apex predator or the conqueror of nature. The Quran applies a specific title to Adam and his descendants, Khalifa. This word is often translated as caliph in political contexts, implying a ruler, but in the context of creation, it means steward or vicegerent. The theology of Khalifa asserts that God is the ultimate owner of the earth. Humans are merely appointed managers. We hold the planet in our hands not as a possession to be exploited, but as an amana, a sacred trust.
There is a profound verse in the Quran where the heavens, the earth, and the mountains are offered this trust, and they refuse it, trembling at the burden of responsibility. Yet humanity and its ignorance and ambition accepted it. This narrative frames environmental degradation not as a side effect of progress,
but as a betrayal of that primordial contract. When a forest is razed for short-term profit, it is not just an ecological tragedy. It is an act of embezzlement against the divine owner. This is not a modern reinterpretation designed to appease Western environmentalists. The history of the Islamic world is paved with institutions that enshrined these values in law long before the concept of sustainability existed. We can look to the Ottoman Empire and the tradition of the waqf. A waqf is an endowment, property or assets permanently dedicated to God for the benefit of the public. While many waqfs supported mosques or schools, historical records from Istanbul to Damascus reveal waqfs established solely for the protection of migrating storks, the maintenance of clean water conduits, and the preservation of old-growth trees. These were not state programs, they were private acts of piety. Wealthy merchants would endow a piece of land to nature, removing it forever from the real estate market, ensuring that no future developer could touch it. Today, contemporary Islamic scholars are dusting off these centuries-old legal frameworks and applying them to the climate crisis. They are arguing that the carbon cycle itself is part of the mizan, the cosmic balance established by the Creator. To disrupt this balance through excessive emissions is to wage war against the order of creation. This intellectual revival is reshaping how believers view their role in the economy. It suggests that green finance movement is not a foreign import from the secular West, but a return to the dormant roots of Islamic civilization. By reviving the waqf for renewable energy projects and invoking the duty of the Khalifa, the religious establishment is attempting to mobilize the faith of nearly 2 billion people, turning the fight against climate change into a struggle for spiritual fidelity. Yet, as we trace the flow of this green capital, we inevitably arrive at a jarring paradox, one that rises from the shimmering sands of the Arabian Peninsula. The most aggressive issuers of Green Sukuk, the nations championing the synthesis of faith and finance, are the very same petrostates that built their skylines on the extraction of fossil fuels. Saudi Arabia, the United Arab Emirates, and Qatar are pivoting toward this market with colossal ambition. This reality invites a skeptical question. Is this genuine repentance, or is it the most sophisticated form of greenwashing the world has ever seen? Can the same hands that turn the valves of oil pipelines truly write the checks for a renewable future? To navigate this moral minefield, Islamic finance experts are introducing a nuance that goes beyond the binary of permissible and forbidden. They are invoking the concept of Tayyib. While halal defines the legal floor, the minimum requirements for an action to be valid, Tayyib reaches for the ceiling. It means wholesome, pure, and good. A transaction might be technically halal because it avoids interest and gambling, but if it harms the community or poisons the air, can it be Tayyib? This distinction is causing a quiet revolution in boardrooms. Scholars are increasingly arguing that for an investment to be truly Islamic, it is not enough to simply avoid the forbidden, it must actively generate good. This framework is reframing the energy transition in the Gulf not just as an economic necessity, preparing for a post-oil world, but as a form of theological redemption. The massive solar parks rising in the desert, like the Mohammed bin Rashid Al Maktoum solar park, are funded by Green Sukuk that are often oversubscribed by Western investors and Islamic banks alike. By channeling oil profits into renewable infrastructure, these nations are attempting to purify their capital. It is a macroeconomic version of tauba, or repentance. The argument is that the wealth generated from the Earth's resources has a duty to heal the Earth. We are witnessing the emergence of ESG Sharia, a convergence where the environmental, social, and governance criteria of modern investing meet the ethical mandates of religious law. They are finding that they speak almost the same language. The prohibition against harm, the requirement for transparency, and the mandate for social welfare are universal values found in both the UN sustainability goals and the Sharia. As this market matures, it offers a provocative possibility that the rigorous, often rigid structures of religious law might provide the discipline that the free market lacks. In a world awash with green claims that often dissolve under scrutiny, the Green Sukuk introduces a third-party auditor that no CEO can bribe,
the theological mandate that one is accountable not just to shareholders, but to the creator of the asset itself. The future of finance may well depend on whether these ancient laws can truly hold the modern world to account.